Good afternoon, everyone. Our traders worldwide. This is a major update on the S&P again on a monthly chart. I would like to caution people though that we're up here at 93.37% on a monthly. That's in a very, very, very extreme up here entering this overbought area. Our target was several months ago, yes, that you would have pullbacks. We did in 2012 where they were viable here. Then calendar 2013, it's a monthly level, but we had some pullbacks. And when we take a look at the S&P 500 on a weekly level, it's extremely overbought. This is the weekly level now, and I'll blow this up for everybody. So we can clearly see that on a weekly level how we consolidate the thin trade, and then we have that breakout up here to that 1550. That was our target. That was set back on many days. That's where the upper end of that would be. And we finally, I can say that we hit that target, and I can say that we're extremely overbought on the weekly, just as I'm showing the monthly chart right here, where you can see the all-time highs up here. Now, granted that it's a great bull, I will say at this point in the game, now by the time that June comes around in May, and we get into the summer period where inflation can run rapid and rates can go higher and treasuries can explode, that would really pull the market back. I will tell everyone that it's been a 12-year full bear market. And we are no longer in that long-term bear, but have returned to a bull. And the bull started in 2009 of March. However, we've had a lot of calendar years where we get pullbacks at overbought levels, and we're right back up here at the financial crisis and we hit 1550. The problem is for a lot of the bigger firms, their year-end target is 1550. At best, at year-end, that's where the S&P. Now, every calendar year, we go up 3 months in a row, and everyone gets too overly optimistic and they start chasing the highs. I am saying that any pullbacks is a good place to put money to work, but not until we get the next pullback. You don't want to chase them up here at the highs. And that when the S&P 500 pulls back, it would be healthy for it to pull back over the next couple 2 or 3 months to about 1450 and then run and make higher highs. Right now, we have an extreme bull in play on the S&P 500. Here's the monthly chart. The thing about the short-term part of it all, it's extremely overbought. It's been overbought in other levels, and we had some great pullbacks because we did. And then they came right back in as bulls should. It's very encouraging to see that the markets are changing, even though the economic data doesn't support it. There's lots of moving forward. There's a lot of risk or whatever. Who cares about that? It is a bull trend. When it does pull back, we will buy the dips. Right now, we are overbought and we're at a 2007 high and we've gone parabolically up for 3 months. Yes, you can see here where we had dipped down here to 1485 and we went all the way down, and that's where the buying opportunities, that's when we said it was going to pull back last time, and it did. But once it had pulled back down there, that you would go higher and that the upper end always remained at 1550. That had never changed, and buying the dip was the right thing to do over here. On this particular monthly level, we can see that the bottom end of this monthly level was, the low was at 1501 and straight up. So now that we have played this course and we have played it, we're right back up here. Look at just look at this from this level, and we go back to 10 years. When you go back to 10 years, you go back to the 2007 peak reversal in the financial crisis, you go back 10 years. What this basically is telling me is that we are at more than a 10 year. It all started in year 2000, and it took about 12 years to work all of that off. And this 13th year that we're in now is where this bull has gone right up, and it's a major top in the S&P, that we cleared those 2000 highs. or up above it slightly, and that the 2007, that was the peak, but we're right here. And this is where it's going to get very interesting because seasonality wise, they're going to have to deal with the S&P pulling back, and they will. And once again, every time we get these pullbacks, you get long, and every time we get these pullbacks above 1500, you get long. And then when they are going to pull back short term, one or two trades, you buy a little bit of put options, a little bit of the VIX calls to protect yourself. There's lots of things that can be done. This is the update for our worldwide trader network at a major bull top at an overbought area with a great calendar run to start year 2013 off. Now, like any market though, you got to buy the dips. Right now, I would not chase these up here. They hit our target. So we're done with it. Whether it wants to go up a little bit more, who cares? The thing of it is where the markets will have their pullbacks and where that buying opportunity will give you a chance.